9 minutes past the hour on the CNN 650 Morning Show, and in the studio with us, Jim Trippon from Tax CPA Houston, taking a look at the ins and outs of a new way of taxation, the VAT tax. Good morning, Jim.
I think we're all going to be swimming in that VAT if Nancy Pelosi gets her way.
It sounds like it, and I've been reading a lot of stuff about this over the last 24 hours, getting ready for the show this morning with you. First of all, the VAT tax is nothing new. European countries have been doing it for years. How might this affect our tax situation in the United States? Why are the government officials saying this is maybe the way to go?
Well, basically, we've got a bunch of people in Washington, and, you know, this has been going on for years. We have a bunch of people in Washington that basically have, if it moves tax. And so they're looking for ways. It's so disingenuous when I think about it, because all the news that's coming out of Capitol Hill right now is, hey, we have this huge budget deficit, we have to raise taxes, But wasn't it just like a month ago they decided to do the biggest entitlement program in American history?
Well, that's why they have to raise taxes.
Of course. So it's kind of like, you know, you give your wife a credit card and she racks it up, you know, on a spending spree over at Neiman Marcus last week, right? And then this week she comes back and says, well, you know, we really don't have enough household income. We need to raise our household income. Well, wait a second. If you didn't rack it up last week, you know, we wouldn't have this problem. So,
you know what concerns me about this, too, is, and I've been reading the way some of these stories are written, and you got to watch the wording. Because in one of them, it says that President Obama may ask Congress to supplement the existing corporate and personal with a value-added tax. Other articles have said, well, they would do this instead of some of these taxes. That's real nebulous, and frankly, when it's nebulous like that, it scares me to death.
Okay, so let me tell you what's really going on here. What's really going on is they are running huge budget deficits up in Washington. They're spending like nuts up there, and what they're looking for are ways to increase taxes, but also have political cover, because they know the midterm congressional elections are coming up in November. So how are they going to do this? Well, basically what the president has done is he's appointed a special blue ribbon commission. Ooh. Blue ribbon. I don't know, you know, who'd be dumb enough to serve on the blue ribbon commission, but they found a bunch of people to do it. And this blue ribbon commission is going to consider all alternatives to raise revenues for the government. Okay?
All alternatives.
Yeah, so that's basically all means code.
Possible.
Yeah, that's code for, hey, let's find out some new way to tax people. Now, here's the deal with the value-added tax. And the value-added tax is essentially like a national sales tax on top of all the other taxes we already pay. So what they're proposing softly, kind of behind the scenes, to see if they can get some traction with it without too much political fallout, is they're talking about adding a new tax, not in exchange for the income tax, not in exchange for state sales taxes, but on top of everything else.
Are they crazy?
They are crazy.
Are they ridiculously stupid?
They are ridiculously stupid, but that's what they want to do.
And what's sad is that this was originally proposed as an idea to replace income tax, and now they just wanted to make it another one.
Right. I mean, ultimately, we're going to get to that two-line tax form that they've been predicting for years. You know, line one, how much did you make last year? Line two, send it in.
Yeah, exactly.
Basically, that's what they ultimately want to get to. But, you know, the value-added tax, it's very common in Europe that they have a value-added tax. But in Europe, what they do, and they also have an income tax in Europe. So basically what we've got are people in Washington that want to remake the United States to look like Europe. And, you know, Europe's kind of nice to go on vacation to. They got pretty public parks, and they got nice museums and all that. But all the people are broke, and they don't live lifestyles like us because they get taxed to death. That's why they have to live in, you know, tiny apartments and buildings that are crumbling down because they're 600 years old. Why? Because they can't afford to build a new one. Okay, and I don't want to live in a 600-year-old building that's falling apart where the roof's caving in and it doesn't have modern plumbing. I'm sorry. I love, you know, living in Texas. I love having a house that, you know, I can find out when it was built. I don't have to do genealogical research. I like to live in a place where the plumbing works and electricity comes on when you flip the switch. I like a refrigerator that's the size of the ones here, not the size like I have in a college dorm if you send some kid to college, which is they got in Europe. I mean, I'm sorry, but, you know, maybe the president wants to live in Europe. Let's send him to Europe. But the rest of us, I think, still want to live here.
Maybe we could arrange that here in about a year and a half or so. Well, let me ask you about this VAT tax, because obviously it's been working for some of the European countries, the problems over there notwithstanding. What is the appeal? Why is this such a great idea? And if it were to be enacted here, how would it work best?
Well, it's it's one of these ideas that was come up with by the Frenchies. Okay, so the French have come up with a lot of good ideas over the time, but
The
they've come
potato
up with
thing was pretty good.
the French fry. Yeah,
Yeah.
I mean the pomme frite. Okay, I'll give them that one. All right, but it's been a while since they've come up with anything else that was relatively decent. The first value-added tax actually started in France in the 1950s. Now it was proposed all the way back in the 19 teens. I think back in 1918 it was first proposed, but the first time it was actually done was by the French. And the French started a value tax in 1954. And basically what the deal was is they were looking for a way to raise a lot of revenues. And so they just layered one more tax on top of their existing sales taxes, on top of their existing income taxes. Now, anybody who studies economics can look at Western Europe and they say to themselves, wow, this is not a robust place of job creation and economic activity. In fact, what happens over there is a lot of their companies move over here or move their headquarters over here. Why? Because they don't want to pay the taxes that they're stuck paying over there. Because over there, they may end up, when you add it all together, they may end up paying something like 60-70% of their income in taxes. And that's basically the model that people in Washington are trying to create for us right now.
Jim, what's the likelihood that the Congress will look at this, they will correctly read the mood of the population out here in flyover country, and they'll say, all right, we'll do this, but we're going to sunset it. It's going to come, and it's going to go away in a certain amount of time. It's going to come just long enough for us to pay off this debt that we've run up. But it's not going to be forever and forever, amen. Do you think that'll happen?
Well, the way I look at that is kind of like when I had this talk with my dad when I was 10 years old. He said, Jim, these toll roads, because, we were up in Chicago on a vacation. He said, these toll roads, okay, they built them in 1955. And the promise was we'd only charge tolls for the first 5 years, because in 5 years, they'd all paid off, okay? I'm sorry, 50 years later, they're still collecting tolls.
Well, because they got to figure out how to maintain them.
This Chicago story sounds very familiar.
And guess who's from Chicago? Okay, so the guy living up on Pennsylvania Avenue. So yeah, he may come out with a proposal saying, yeah, we need this value-added tax, and yeah, we'll only, we got this economic crisis right now, so we'll do it for 5 years or 10 years or 20 years, but then it'll go away. It'll just sunset. It's going to be like Obama's Chicago toll roads. 50 years later, we'll still be paying it. And, you drive on the road, you pay the money.
Now, the critics of the VAT are saying it's efficient, it's fair, but it's going to raise too much money. And because it's so efficient, raises so much money, then it would encourage the purchase of more public services on the part of the government.
Well, okay.
Is that fair?
So I haven't met a politician yet that thought they could raise too much money. Okay? Because it's what's that old
at least
song?
they're not going to admit it.
Well, I think it's one of those old Woody Guthrie songs. It's not too hard to live off somebody else's money or something like that. Anyway, no, it would raise a lot of money, and it would raise a lot of money on people who are already paying a lot in tax. But they'll find a way to spend it. I mean, don't you worry. They'll build a bridge to Alaska from Ohio or something. They'll find some way to do it.
How would the VAT tax address the issue of non-compliance with the current tax structure that we have right now? Because the IRS estimates that the difference between what we pay and what we should have paid in 2001 was about $345 billion, which is about a 17% ratio of federal revenue that year. Would a VAT tax eliminate that problem, and how?
No, not necessarily. Well, the thing about the VAT tax that people who are looking at tax policy say, and there is an element of truth to it, a lot of people who work in the shadow economy, maybe they're doing services for cash, okay? So a lot of the illegal activities like drugs and some of the other stuff that people do, they do for cash. And when they do those things, they're not paying tax on it because they're never reporting the income. And so the concept is, if you have a national sales tax, what will happen is that the people who actually spend money, okay, some of which may not be paying their income taxes, those people now all of a sudden will have to start paying taxes where they may not have paid taxes in the past. There's a couple fallacies with that. One fallacy with that is that the people who tend to spend the most of their income are the people who have the lowest income. So usually a national sales tax or a VAT tax like you would have in Europe penalizes most the people with the least, right? Because if you're making $20,000 a year, you're probably spending every penny of it to maintain your household. If you're making $2 million a year, you're probably not necessarily spending every penny of it just to keep food on the table and clothes on your back.
But if you applied a value-added tax at a rate of 5% instead of everything else that we're doing, that would be a lower rate than people are paying right now, including the poor.
Well, so therein lies the rub, okay? Because it's not ever instead. It's always on top of, okay? And so you end up throwing more weight on the back of the taxpayer, more weight, more weight, more weight, and ultimately the taxpayer, falls over with a heart attack because they can't carry it.